Assalamu alaikum. Dear student, let's just start employment income. And in employment income, we are first doing basic employment, which is the common topic in TX and ATX. Let us quickly discuss basic employment. Few basic things which you need to know. Basically, when you are working somewhere, so obviously you will be getting an employment income, and on that employment income, you have to pay tax. Employment income is a non-saving income. But basically the employment income is consist of two things. One is, I would say, cash benefits. Let me give you the examples of cash benefits. For example, salary. Obviously, salary is the one of the biggest benefit of being an employee. If you're not getting salary, so you should not be working. Second is bonus. If your employer is kind enough towards you, so you'll be getting bonus as well. So these are the two examples of cash benefits. Now let's discuss. You'll be getting non-cash benefits also. The non-cash benefit means benefits in kind. Benefits in kind means other than cash. So basically, in employment income, you need to learn how to calculate cash equivalent of benefits in kind. The entire discussion will be on this area. How to calculate cash equivalent of benefit in kind. So you need to learn the rules, how to calculate the cash equivalent of benefits in kind. So in employment income, when someone is working for the organization, so simply that when someone is working for the employer could be an individual employer, could be a company, could be a company. So employment income is consist of two types of benefit. One is cash benefit, for example, salary, bonus. Another is benefits in kind. In case of benefits in kind, actually you need to learn how to calculate cash equivalent. The first benefit which we are discussing is accommodation benefit. That is, leave this part right now. We'll discuss this, but in some other videos. The first benefit which we are discussing right now, it is a living accommodation. For example, your employer has given you the job, number one, and after giving you the job, your employer is very kind towards you, and employer is saying that we will give you the accommodation as well. So in case of accommodation, how do we calculate the taxable benefit? So we need to calculate accommodation benefit. Accommodation benefit. In case of accommodation benefit, basically there are two benefits. One you can say is a basic benefit. The basic benefit is also called a rent benefit. The basic benefit is higher of 1 and 2. Now what is 1? The 1 is annual value of rent. Annual value of rent. Simply, you have been given a rent-free accommodation. Employer is not charging you any rent and he has given you the accommodation. So definitely you are having a benefit that you are living in that accommodation and you are not paying any rent. So there's a benefit for you. We need to calculate that amount of the benefit. And in case of accommodation, there are two benefits. One is basic benefit, which is higher of 1 and 2 high. One is annual value of the rent. Annual value of the rent means simply the market value of the rent. Second, rent paid by the employer. Rent paid by the employer. It is possible that your employer does not own the property. What he has done, he has taken the property on rent and given to you. You are living in that accommodation and your employer is paying the rent. So in that case, the basic benefit is higher of annual value of the rent and the rent paid by the employer. But normally, property will be owned by the employer. If the property is owned by the employer, then basic benefit will only be one, that is annual value of the rent. So if the property is own property of the employer, then the basic benefit is equal to annual value of the rent. But there is a possibility that employer has given you the property which is not owned by the employer. So you are living in that accommodation and employer is paying the rent. In that case, the basic benefit is higher of annual value of the rent and rent paid by the employer, and it will be categorically clearly mentioned in the question either it is the own property of the employer or purchase, and nothing is mentioned. You will always assume it is the owned property of the employer. Now, in addition to the basic benefit, there is one additional benefit also, but that additional benefit only arises this additional benefit of accommodation. Dear student, additional benefit only arises when the accommodation, number one, it is a purchase accommodation by the employer. Second, the cost of the accommodation, that is purchase price plus the capital expenditure, is more than £75,000. If the accommodation which is given to you is costing more than £75,000 to the employer, so there is an additional benefit also. How do we calculate that additional benefit? Simply cost minus £75,000, which is fixed, into 2%. 2% is the official interest rate in Finance Act 2022, and it was same in 2021 as well. And another important point, this 2% which is official interest rate, it will be given to you in exam in tax rates also. So additional benefit only arises when, number one, it is a purchase accommodation by the employer. Second, it is an expensive accommodation. Expensive accommodation means the accommodation which is costing more than £75,000. Costing means the purchase price plus the capital expenditure, but obviously those capital expenditure which were incurred before the current tax year. You just need to add, if the answer comes more than 75,000, then there will be an additional benefit also. Let us see what book says, and then we'll be discussing with the help of numerics. Living accommodation, basic charge is higher of annual value of rent paid by the employer, if any. Only applicable if property is rented on the behalf of employee. Here comes the additional charge for expensive accommodation. Only applicable if the property purchased by the employer, not rented, and property cost more than £75,000. Benefit, how do we calculate that additional benefit? Cost of the accommodation less 75,000 into official interest rate, which is 2%. Official rate is 2% currently, and this rate will be given to you in exam also. Cost, what is the meaning of cost? That is very important. Purchase price of the property plus the cost of capital improvement made but before the start of the tax year. For example, the current tax year is 20 to 23. You will be adding all those capital expenditure which were incurred before the current tax year. If the property is owned by the employer for more than 6 years before providing it to the employee, then use the market value when the first provided, not the purchase price. For example, you are an employee of the organization, and organization is giving you a property for living, okay? And number one, it is the purchase accommodation of the organization. Second, the cost of that accommodation is more than £75,000. And third, more than 6 years have been passed before it is given to you. Then we will replace the cost with the market value. Irrespective of market value, the additional charge will only apply to a property where the original cost plus the improvement completed prior to the start of the tax year exceeds what? £75,000. So if the property is owned by the employer for more than 6 years before providing it to the employee, use market value of the property when first provided, not the purchase price. Irrespective of market value, additional charge will only arise to a property when the original cost is more than £75,000. And we know that cost means purchase price plus capital expenditure incurred before the current tax year. Now come here. Where were we before? Sorry. Okay, sir. For example, Mr. A is given a rent-free accommodation by the employer, of course, a rent-free accommodation costing £90,000 on 6th April 2022. Annual value of the rent. Annual value of rent is £9,000. The requirement is very simple. Calculate taxable benefit. Calculate taxable benefit. You just need to calculate taxable benefit. That is, you can say requirement 1. Requirement 2. Mr. A pays £200 to the employer due to living in this accommodation. Again, you need to calculate accommodation benefit. But in point number 2, in second point, what is happening actually, the Mr. A is also paying to the employer £200 due to living in this accommodation. Let's go for 3. Employer purchase this accommodation, this property, 7 years ago before providing to Mr. X, before providing to Mr. A, sorry. So on 6 April 22, market value of property is 2,50,000. All 3 cases are separate. They don't have link with each other. In all 3 cases, you need to calculate taxable benefit. Either you can say 1, 2, 3 or ABC. It's up to you. But all you need is just calculate taxable benefit. Let's try. Number 1. Case number 1. First, we'll take the basic benefit, which is rent. The rent is 9,000, the annual value of the rent. And then we'll add the additional benefit. Why do we need to add additional benefit? Because accommodation is an expensive accommodation. Simply add 90,000 minus 75,000 into 2%. So let's see what is the result. It is 300. Taxable benefit is 9,300. Then let's go for 2. Again, the rent is 9,000. Add 90,000 minus 75,000 into 2%, which is obviously 300. But this time the benefit is not 9,300. What is happening in point number 2 or second requirement or second case? Mr. A is contributing towards living this accommodation. Basically, he's paying to the employer. If he's paying to the employer, then that payment will reduce the taxable benefit. Repeat. If examiner says Mr. A is paying the electricity bill, Mr. A is bearing the repair cost, Mr. A is spending £200 on cleaning costs, that will not reduce the accommodation benefit. But due to living in that accommodation, Mr. A is paying to the employer only. Then accommodation benefit will reduce. He is paying £200 per month. Less payment to the employer. Payment to the employer. So 200 into 12. 200 into 12. 2,400. Here comes your taxable benefit. Now this accommodation benefit, taxable benefit is, let me deduct this, 6,900. Third, case 3, again the rent is 9,000. But since number 1, it is the purchase accommodation, and I did mention earlier also nothing is mentioned, then it is a purchase accommodation. And before providing this accommodation to Mr. A, 7 years have been passed, means more than 6 years have been passed. In that case, the cost will be replaced with the market value. So instead of cost, which is 90,000, we'll take market value, which is 2,50,000, minus 75,000, which is fixed, into 2%. So 250 minus 75,000, and then I'll take 2% of this. It is coming 3,500. So the taxable benefit is 12,500. Taxable benefit is 12,500. Okay, let me give you another example on this accommodation benefit. For example, let's say Mr. A is given a rent-free accommodation. A rent-free accommodation, obviously for living, on 30th September 2022. Simply rent, or you can say annual value. Rent, or you can say annual value, is 18,000 pound. Let me change it, sorry. The annual value is, let's say, 24,000. Original cost of the property. Original cost of the property is 1,75,000. The requirement is we need to calculate taxable benefit for the tax year 22 23. Required, you need to calculate taxable benefit for 22 23. Now look at the question. This time in this question, in this example, the property was not given at the start of the tax year. The property was given on 30th September 2022, which means that from 30th September 22, if I go till 5 April 2023, if you count, so we have 6 months. So in this question, the accommodation benefit, which we are going to calculate, it will not be for the 12 months. Now the accommodation benefit will only be for 6 months, because this accommodation was not available to Mr. A for the entire tax year. It is available to Mr. A only for the 6 months. So the rent, which is 24,000, let's take 24, no issue at all. Add additional benefit comes also in this question because it is an expensive accommodation. 1,75,000 minus 75 into 2%, definitely 2,000. So here comes 26,000. But the problem is this 26,000 benefit is for the 12 months. And in this question, Mr. A is having this accommodation only for 6 months. So taxable benefit for Mr. A will be for the 6 months. Taxable benefit for Mr. A, instead of 26,000, it will be 13,000, 6 by 12. because entire tax year the accommodation was not available to Mr. A. So we have covered all the varieties relating to accommodation benefit. Okay. And another very important point, dear student, in this lecture, when you'll be downloading this PDF, there's no need to read this area. We will cover this area later on. Don't worry at all. Inshallah, we will cover. That was all about accommodation benefit. Now let's discuss another second important benefit, that is beneficial loan benefit. Beneficial loan benefit. Let us first discuss what do you mean by beneficial loan. Let us first discuss what do you mean by beneficial loan. Actually, beneficial loan means one, employer has given loan to the employee interest free. Obviously, if employer is giving you the loan interest free, so that is a beneficial loan. Second possibility, that employer has given the loan to the employee, but employer is charging the interest lower than the official interest rate, which is 2%. So in both the cases, it is treated as a beneficial loan. Either your employer is not charging you any interest. Second, if your employer is charging you the interest rate is lower than official rate, and official rate is 2%. So beneficial loan means, I'm just explaining right now what do you mean by beneficial loan. Beneficial loan means interest free or interest rate on the loan is less than official rate of interest, which is 2%. Official rate of interest, which is 2% in Finance Act 2022. And let me clear one more thing. This 2%, whatever the rate is, it is always given to you in the tax rates. So official rate of interest, which is 2%. Okay. Now, how do we calculate beneficial loan benefit? Let's see the question. Mr. X is providing his loan details. 6 April 2022. He took the loan from the company amounting to 20,000. December 22. He took the loan 10,000. 31st January 23. Loan repaid. He repaid the loan 8,000. Repaid means he has returned the loan. He has paid the loan. So he has paid 8,000. Okay. Mr. X is paying interest 0.5%. Required. Calculate taxable benefit. These taxable benefits, they increase employment income. So you just need to calculate taxable benefit. Now listen and listen carefully. When it comes to beneficial loan benefit, there are two methods. One is called precise or accurate method, and another is average method. A very important point is, whenever you come across a question which on this beneficial loan benefit, you have to calculate the taxable benefit by using both the methods. And after calculating the taxable benefit by using both the methods, then you will be choosing the method which has a lower taxable benefit. Obviously, lower taxable benefit means income tax will be lower. So the tax planning is Number one, you have to calculate the taxable benefit by using both the methods, and then you'll be choosing the benefit which is lower. Let us first go for accurate. Another name is precise method. Accurate / precise. You can use any name. And we need to calculate taxable benefit for the tax year 22-23. Fine. The loan on 6 April 2022, start of the tax year, he took the loan of £20,000. And how many months this loan was £20,000? If you count from 6 April 2022 till December 2022, if you count from 6 April 22 till 31st December 22, so we have 9 months. It means the first 9 months, the loan was £20,000. Simply you need to count the months. From 6 April 22, if you count till December 22, there are 9 months. So look at this, what I'm doing. Interest, there's no need to even write interest. Just see what I'm doing. 20,000, the official interest rate and the 9 months. Let me use the calculator. It should be 300. Fine. Then on December 22, what he did, he took 10,000 additional loan. It becomes 30,000. So initially the loan amount was 20,000, then further loan was taken 10,000, becomes 30. So December 2022, the loan becomes 30,000. And from December till January 2023, there's 1 month. 1 month, the loan amount was 30,000. So you have to take 30, 1 upon 12. You might be thinking that, sir, this gentleman is paying 0.5% instead of 2%. So logically, there is a benefit of 1.5%. So why we are not directly working on that 1.5%? I'll come to that. Wait for a minute, please. If you're thinking like that, your thinking is absolutely correct, but I just want you to wait till the end of this question. It is coming 50, okay? Now what happened on December? Now what happened on December 2020? What happened on January 2023? He repaid 8,000. So earlier the loan was 30, but he paid 8,000 back. So the remaining loan is 22,000. And this 22,000 remains 22,000 for the next 2 months. That is Feb and March, because we are working for the tax year 22-23. So 22,000 into 2%, 2 by 12. 22,000. Let me recalculate. It is coming 73. So without any, if there was 0% interest, the benefit would have been, let me get 423. If the loan was interest free, then the benefit would have been 423. But obviously, you know that, I know that the interest is not, loan is not interest free. This gentleman is paying 0.5%. So logically, the benefit is not 423. You have to deduct the interest payment by Mr. X. Simply less interest payments. It's very simple to calculate interest payments. 20,000. He's paying 0.5%. 9 by 12. You will be having same months, but obviously the interest rate instead of 2, it will be 0.5%. 30,000. 0.5 he has paid 1 upon 12 plus 22,000. 0.5% and 2 by 12. Let me use the calculator.